Morning, Bill.
Record live on Facebook. Okay, I'm sharing my screen, by the way. Give me a second here. Broadcast. Give me a second. We'll just take a few seconds here to, I just want to make sure this progress bar completes on Facebook Live. And I'll try to, as before, I'll try to pay attention to the comments if there are questions on Facebook here. And again, this is just our monthly cadence. Well, I shouldn't just say just, because the market is so changing so fast. So anyhow, knowledge sharing series for first-time home buyers. Ian, welcome. Please, we want this to be very interactive, and we will entertain questions even in the middle of the conversation. So please just unmute your mic if you would have any questions. So quick intro on myself again. My name is Bobby Taruc. I think this is evident in our Eventbrite page. All of my contact information is in there. Through Keller Williams Premier Properties. Actually, that should be, I should take the word realty. I'll fix this slide. In Glen, Ellyn. And then my wife, Joan, partner in crime, partner in the business, and her contact information is there as well. You can find us all on social media, on Instagram, Facebook page, YouTube. I don't have Team Taruc on my TikTok, but we're all over social media as well. And then our partners in crime as well, attorney Eron McCormick out of the McCormick law firm. Eron, if you don't mind introducing yourself.
Morning, everyone. I'm attorney Eron McCormick and with the McCormick law firm in Wheaton, just right across the street from the DuPage County Courthouse and Government Complex. Our office focuses on primarily residential real estate. We do some commercial, or as I like to joke, commercial light. So if you're buying a 5, 6, 10 unit building, that's our niche. If you're looking to buy something that's like a formerly polluted piece of land, that's not the type of commercial we're doing. We do some estate planning and business entity formation, help real estate investors, advise them on how they should handle their transaction. And if you have another legal matter or legal need, we can sit down with you and advise you or point you in the right direction. So if you need anything, reach out. Our contact information will be provided at the end of the Zoom.
Okay, thank you, Eron. And Bill?
Hey there, how are you? sorry for my tardiness.
That's okay.
But yeah, my name is Bill Pendley, and I've been writing mortgages in the Chicagoland area for 25 years. So yeah, I've seen the good, the bad, the ugly. I think we're in a really, really good time right now. So I'm excited about being on here today and just kind of walking through, like Bobby said, the changes in this market are very, very interesting, to say the least. So we're here as a team to help you and walk you through the process. So if there's any questions, like Bobby said, we're here, and yeah, we'll walk you right through the process. I think one of the cool things that we do as a team is we actually take this offline, go into more of a buyer one-on-one consultation via Zoom, and that's creating a quick space and also convenient, and it creates comfort for you as a buyer. So because there's two parts in this world right now that we live in. You live in the fact that you want to get a pre-approval, but you also have to strategize your offer up front. So we'll walk through that as well too.
Yep, absolutely. Ian, if you don't mind me asking, what do you hope to learn today, so we can really tailor the conversation for your need? Help us understand, what do you hope to learn today?
Yeah, it looks like Ian is new to the home buying process. So that's awesome. I think it's a great time to purchase. One of the things that's pretty interesting right now, that's kind of a reason why people are out purchasing, is rent prices are skyrocketing. So I'm not sure if you're renting or not, but it'd be interesting to see what your rent, if it's gone up yet, what that has gone up to.
Yeah, I want to speak to that really quick. And I'm going to talk about these PowerPoint slides later on. I attended a seminar, one-day seminar. This is a great economist. And what was unique about this person was that he was really great in following data and numerous sources, and he has data nationally. So he can pay attention. He was talking about all of the macro trends, and had data as well at the city level, statistical metropolitan area. It was great data. The one thing that really struck me in that one of the presentations as it relates to what we're talking about here is that rent increases are outpacing inflation. They're even outpacing home appreciation prices. And Eron, I'm sorry, we won't converse about the economy, but when I think about rent increases and how, because rental market rates are baked into the calculation of inflation. And everything about the real estate market, of course, is baked into the calculation of inflation. And we know how runaway inflation is today. So there's opportunities in different aspects. But what I want to focus on is there's actually an opportunity for someone leasing today, renting today, if your lender partner can walk a person or a potential home buyer through, set their financial house in order, some point in time, there's a affordability curve that makes more sense to purchase. Bill, can you expound on that for me?
Yeah, I mean, when I first got in the business back in 1998, I didn't have very many deals at all because I look like a little baby. So one of the things my manager always said is, always explain what the last deal, like what was your last deal? Like if you had a deal, what happened with it? And that's going to let people know like what's really going on in the market and how things are working for you as a loan officer. So I said, okay, well, I'll never forget that when he said that. So just recently, I think I mentioned this to you, Bobby, but we had a lady that was down in Florida, great area, by the way. But we had a lady down there that was freaking out because her landlord had come to her and said, your rent it's not only $17.95, which is a crazy amount for like a small little 600 square foot place, but we're going to increase it to $2,200. She went down there just to retire, and all of a sudden now forced into, wow, what am I going to do? I'm actually going to be homeless if I can't figure out what to do because I can't afford $2,200. So we set her up an approval, walked her through the numbers, and wound up finding her a bigger space, $70,000 condo, and her payment went from like a $2,200 rent down to $1,200. So like Bobby was saying, rents are moving at a much, much faster rate than what you're going to see with interest rates. Because I think that's a big component today is that people are seeing different rates today than what they saw in December, which was a couple months ago. So, and the worst thing about change is change itself. But when you look at 30-year amortization and how much difference that makes versus what somebody's changing your rent to with a big amount, that's a huge deal. So I think right now, if it is in the forefront of the future of a thought process, sorry, we got the long guys here too. Then I would say sit down. It doesn't hurt to go through a free approval process and really walk through the numbers. I think what a lot of loan officers and lenders, forget to do is really walk people through showing out the door costs and what that really is going to do for you, and show it in a visual sense. So like when you and I, Bobby, get on a phone or a Zoom call with somebody, we walk them through out the door costs, showing them what their monthly payment is. And a lot of times we'll start with the monthly payment to back that out and say, look, where do you want to be? Like, do you want to be at a $2,200 a month payment? Okay, well, you either have a choice of staying in rent, which you're not going to get any appreciation or amortization, and that creates equity. Or what we can do is set you up and maybe get you into a home where you're going to start out with instant equity, and you're going to be able to have a tax write-up, because that's another piece of the equation too. a lot of benefits here to really walk through, but really starting out with that visual and creating the comfort of knowing what you're going to be able to afford. But you'd be surprised at what you can afford when you really look at it on a number sense right now.
Yeah, absolutely. Before I welcome Lisa, because I don't want to lose my train of thought, Bill, one of the conversations as well that we're finding out, or I'm focusing on, or able to focus on, is that more often, and I think it even includes people who are purchasing their second home or selling their home and then purchasing on to the next home. I think people are having a hard time grasping or wrapping their arms around the price point. But when it comes to PITI, meaning principal, interest, taxes, and insurance, when it comes to the monthly payments of PITI, and you take a look at their budget and their debt to income ratio, actually, people are able to afford a $350,000, $375,000, $400K, $1,000 home. Looking at exactly the numbers, but sometimes people have an assumption, or people get the sticker shock. Oh my goodness, this home is way too expensive, and people are bidding $10,000 over ask, $20,000 over list price. But crunch the numbers again with Bill's team, it still makes sense.
Yeah,
Bill,
the best way. Oh,
how
sorry,
do you
go ahead.
navigate those conversations?
Yeah, I always try to simplify things, because when it comes to the numbers and just this fast-paced environment that we're living in, really to kind of help people compartmentalize what to expect, right? So like, let's say that you are going a little over list price, and let's say it's a couple thousand, maybe it's not a $10,000, $20,000 difference, but it's a couple thousand. The way that I usually explain that to buyers is say, look, it's only in the grand scheme of things, it's only literally like a $4 or $5 difference per thousand. So if you're going to freak out about that, maybe we need to check a different price point, entirely. But when you're looking at just a difference on, because just remember that's amortized for 30 years. So when you take that difference for that long of time, it's not a huge difference when you're looking at a couple thousand. So my goal is to try to simplify things, create that comfort when people get into an offer, but also just to make sure that you go, listen, don't overthink it when you're looking at a couple of $1,000s here and there. Now, when you look at, when you're going over price that much with 20, 25,000, and you're putting in appraisal gaps and all these other different things we could open a can of worms with right now. That's a whole different strategy, and we just need to take that on a one-on-one and really kind of gauge what difference that does make. Like, here's a perfect example. Are you going to be in the property for less than 5 years? May not make sense to go $25,000, $30,000 over. If you're going to be in there for long term, then yeah, I mean, to me, you look at it and you think about the time frame that you're going to be in that property. Now, we never know what's going to happen. Obviously, with the last couple of years and what's going on right now, we don't know what's going to happen in the next year, 2 years. But at the end of the day, that's kind of the way to look at it when you're looking at buying a property.
Yep, absolutely. Thank you, Bill. So, Lisa, if that's okay, if you can unmute yourself, what do you hope to learn today? Because I want to make sure that we actually address what your needs are instead of us blabbing.
Well, I am a newly licensed agent, so I'm actually just looking to gain information and education wherever I can. I'm just trying to arm myself to be, I guess, better equipped to talk to clients.
Okay, absolutely. I'd be glad to help us.
Welcome to the wonderful world of real estate.
Thank you so much.
Welcome.
Where are you located, Lisa?
I'm in San Antonio, Texas.
Nice. All right. Well, that's great, because Bobby and I can actually help maybe connect buyers to you, because if I just posted online the difference between people moving into Illinois and moving out. So we're always connecting with different states. Our company's a national company too, and same obviously with Keller Williams, and Bobby's well versed on making sure to connect people, the right people, because we have a lot of people going to Texas right now too.
Awesome.
Absolutely.
Thank you so much.
Absolutely. So we can just, to me, the why and understanding and overcoming the obstacles in people's mind around why should I buy this time. The how is, I feel the how is the easy part. I think 20% of this process is, and success in this process, that is in the life cycle of purchasing a home, 20% of the success is just mastering the how. When we can overcome the why in the buyer's minds, I think we're 80% there in essence. I think that just one quick example, and I'm not bragging, okay? We knew how difficult the market is. And our very first buyer client for this year, Joan, my wife Joan, showed a couple of properties, a handful of weekends, not crazy amount of properties, but I wrote one offer on one property on the very first offer, and it was a multiple offer situation. It got accepted, and Lord willing, we're going to close on April 4th, which is this coming Monday. So what I say that, and I tell the story because, Ian, for you, I would encourage you not to listen so much about what other people say, or even the media or the news. Granted, the market's really hot. What I'm saying is, our team, Eron, Bill, myself, my wife Joan, we have a strategy around how we will approach the home search and the home buying process, and the communication part and the negotiation part, where we actually go to the top of the pile when there are 20 offers on a specific property. We're not going to go crazy over asking price, as Bill mentioned. We want to be sensible, but there are strategies around how we can win that deal. So, Eron, do you want to comment on that, if you don't mind, as we go into attorney inspection contingency?
Sure. So some of the things I see clients doing are, when they go to look at the home after they decide they want to put in offers, people may be doing an as is versus a waiving the inspection. Depending on the home, I may not waive the inspection under paragraph 11 of our contract. I know you have thoughts on that, Bobby, about waiving the right to an inspection. But waiving the inspection, doing an as is, may be one way to win your contract or win your offer. With an as is contract, you get to still bring in a professional home inspector and look at the top to bottom of the home. And that's gonna, help you do your due diligence. You got to decide if you want to move forward. Are there any issues with the home? The one thing I'm starting to see more and more than I did last year is people are starting to have second thoughts about as is. And so I'll have a conversation with them, especially when I know the property was a multiple offer situation. Is if you're, going into the contract, going into this purchase on an as is offer, and then trying to send in an attorney modification letter, which is where we get to ask questions, things of the seller to finish our due diligence, and then want to ask for repairs or credits, and it was an as is offer and you won that offer, that's probably going to put a strain on you continuing this deal. So you need to either move forward or not. If there's something extremely outrageous, maybe that's a different conversation, and that there's a way we can present that, but in good faith, you shouldn't be asking for repairs or credits. If you do a waiver of professional inspections, well, then you're not getting to bring in anybody, and that may not be a good idea depending on the type of home it is. If it was built last year or 2 years ago, maybe that's a different decision. But if it's a 40, 50, 60, 70, 80-year-old home, you may not want to waive your right to an inspection because there's nothing you can do about getting somebody in. And I've had a few clients who waive their inspection, and then 4 days into attorney review, we have 5 business days after the date of acceptance, they want to bring an inspector in. And they want to have me reach out to the seller's attorney and say, can we bring somebody in? And the seller's like, absolutely not. And so their only option is to cancel the contract or move forward. So Another strategy would be an appraisal gap waiver, which I know some people, or an appraisal gap addendum. I was talking to you, Bobby, about one of those situations I had with another client from a different brokerage, and I represented the seller, and the property appraised for $50,000 under. And then there was a big issue about the buyers didn't want to pay the $50,000 under. The deal wound up falling apart, and my clients were the sellers. I encouraged them to just let it go and refund the earnest deposit, even though they didn't have to. I encouraged them to just let it go. And so you really have to be prepared as a buyer, if you sign that your attorney, at least in this state, we use attorneys in the Chicago metropolitan region. Your attorneys should be explaining to the buyer what that means. So you could be on the hook for that money, and at a minimum, if you don't pay what the appraisal addendum says, you're going to lose your deposit, and you do risk getting sued. So there's different things you can do to try to win your offer. Just make sure you hire a competent attorney to go over those strategies with you after you sign the contract.
Absolutely. Thank you, Eron.
Yeah, I would agree with that too.
Yeah, Lisa, really quick. We're here in Illinois, by the way. We want to put the caveat that everything that we're talking about that will be Illinois laws. So take a caveat and see if there are nuances and differences with Texas laws and even state law that is. So take it with a grain of salt. So I'm going to run through quickly in this process really quick, but Bill, I'll come back to you right after. So Ian, selecting a real estate agent, hopefully you'll choose us when you do make that decision. And then this is the key part, Bill, I'll come back to you. Obtain a pre-approval on the funding of your home. And then we do a sit down, a deep dive with you, Ian, analyzing all of your needs and wants. We do a buyer consult, and then we start selecting properties. There are different techniques there's even a database called the Private Listing Network, which is not public facing. It's not syndicated to Zillow and Trulia and Realtor.com. There's that private listing network where your real estate broker has access to the database. So we will be looking at those as well. I'm going to go on a rabbit trail here if I discuss the private listing network. But anyhow, that's another database that we have access to that's not syndicated to websites like Zillow. And then hopefully we get to make a decision on a specific property. We write the purchase offer, and then as that is received and accepted by the seller, we make a deposit in the earnest money, that is consideration, and then we negotiate the terms, which Eron was alluding to. We engage his services. But Bill, can you walk us through really quick on sitting down with you? Does your team prefer in person? Do you prefer online meeting? How do you walk us through the process in getting our client really educated and well armed to compete?
Yeah, no, that's a great question. I was thinking about that earlier today. Is in this market, I mean, let's just back up a little bit. Pandemic has created this virtual space that we live in to create that quick, convenient, and also a comfortable atmosphere. In a way, I mean, engagement is great. Don't get me wrong, but when you're looking at how fast this market's moving, I think what I love about the virtual space is being able to run different scenarios. Within a matter of 10 minutes, I can throw about 5 different scenarios your way and show you really form fit the breakdown of the numbers. And every single time it's unanimous. Every time I do a virtual buyer consultation with the client, there's that aha moment where they're like, oh, that's it, versus me sitting in a restaurant, pulling out a piece of paper, running chicken scratch. I used to do that all the time. This is just an awesome way to actually put this into really, really a tight, detailed structure so that out the door costs. And then I also take it one step further and I will record it with the pre-approval, with the breakdown and figures that we just talked about. So that not only does the client know that, but the real estate agent can watch the recording as well. And I think there's two parts of this market right now. One, there's the pre-approval phase, but then two is the structure. If you're not sitting there with a team that, like us, that is actually sitting up and huddling like a football team and putting a plan together for your specific need and how we're going to structure this deal, then you're really setting yourself up for failure. And I'm not saying it directly to you, Ian. I'm saying like to anybody out there that's actually looking to purchase. This is a really, really fast-paced world on the upfront. In fact, the other day, I had two instances on Sunday night. It seems like like all the real estate agents and loan officers are working at 10 o'clock on a Sunday night right now, because of the fact that what happens is when you know what, on the listing side, they're kind of waiting. They're saying final and best at 5 p.m. on Sunday. So you get people that when a listing pops on the market, they want to see the offers and they know that they're going to be coming in. But I've ran into where there's been 30 offers on a deal, or like, let's say that somebody saw an open house that day, and then we're writing an approval at 12 o'clock at night. My point is that that's the reason why you want to really pump the brakes if you're out looking or without an approval, and really dial in those numbers so that you can go in and leverage that. So the other component I was talking about is you got the pre-approval phase. What I'm personally doing is I'm actually doing it with a pre-approval. We have a digital application piece that we send out to clients. It'll pull your verification employment. If you're a W-2 employee, you can link up your assets. We've invested $40 million into this piece alone. So it actually helps us get you an approval within minutes. But if there's some hair on it, like let's say the credit scores are a little light, or let's say that we may not have the down payment, I may take it and say, run it through a full approval. Full approval is where an underwriter actually views the loan, and that's your final say anyways. So that's just a way to kind of help the seller and the listing agent know that, wait, not some crazy loan officer has given a pre-qualification or pre-approval. It's actual, the last decision and last chain of command there is the underwriter, and they're the ones that have final say. So I'm getting full approvals. They're called TBDs, or to be determined properties. We're one of the only companies that's doing this. And what that does is it actually helps the seller know that, okay, well, all we need is appraisal, title, and insurance. And then that deal can close. It's really a huge, huge deal right now in the marketplace. All right. So you got the pre-approval phase. The second piece is when we take it with Bobby and myself and really set up a plan. There's some people out there that are writing offers that don't know that they can actually utilize certain tactics to leverage their deal. And it's because their loan officer and real estate agent aren't communicating clearly, or they're not all communicating clearly. So I've had it in some cases, somebody's putting an offer with like a 3% down or 5% down, but they have 10 or 20% that's showing in their bank accounts. Why wouldn't you put that on the contract and negotiate that? Because if you have 30 other people that are on the offer right now, and let's say that you have 10 that are putting 10% down, and then there's 5 that are putting 5% down, and you try to go in with a 3% down offer, it's really going to put you in the back of the pile, like Bobby mentioned. So what we want to do is we want to take this to a buyer consultation and really strategize what way we want to present that offer to the seller.
Yeah, absolutely. Thank you for that, Bill. So Bill, let's briefly touch on the scenario where Ian may have a property to sell. A lot of the objections of the sellers out there is I don't have a place to go to, or it's going to take me some time to go find a place and actually make the sale and the proceeds from the sale of my home contingent on going into a contract with my second home. How do you have any strategies and loan products that can make that problem solve a little bit better?
Right. Great point. And it's going right into those remove contingencies. I think when a first-time home buyer, or anybody for that matter, if they haven't been doing mortgages or real estate for a while, the word that kind of strikes them, what does a contingency mean? Contingency basically means that something is going to hold up the transaction. Until that's removed, then we can't move forward and close on your house. So like there's a contingency date. So like on a contract, we want to make sure that's when you're going to get your clear to close. So when you're looking at actually owning a home, the biggest issue right now for people in owning a home is the fact that they don't know where they're going to go. So,
Right.
and I've had people say, I'd love to list because they're getting that top dollar for their house, but they just don't know where to go. So if they don't have that wherewithal with how to utilize that equity, then they're going to be considered a contingent offer on a property. And that's just not going to fly in this market. So just remember, if you put yourself in the seller's shoes, if you had 10 offers and somebody said, yeah, can you wait for me to sell my house? What are you going to say when you have like 10 other people that are like, I don't have anything holding me up. I can close like in 30 days. Let's move on this. Then you're going to take those other ones. So contingency is one thing you want to make sure that you remove. And one of the things we do really look backwards to move forward. So I'll check and see what the loan amount is. I'll check and see what Bobby can actually run a market analysis on this to check and see what he thinks the value would be. And also kind of timelines is how fast that loan would close. So there's a few different options you can look at when you're looking at buy now, sell later. So I posted that on my Instagram a few months ago. And one of the things you can do is you can say, okay, let's take a HELOC. What is a HELOC? It's a home equity line of credit. Basically what that's doing is it's taking out a line of credit on your house. It's like a credit card on your house. And you don't pull any money out until you're ready to move forward. It's kind of a short-term, like a bridge loan, but it's not as expensive as a bridge loan. So a HELOC is basically, hey, bank, I'm gonna open up $50,000 line of credit and I'm gonna let that sit. And the key with that is you don't want to be listed. Once you're listed, then all of a sudden lenders aren't gonna lend on that. So that's what you want to do. If you're thinking about listing your property, put a HELOC on it and let it sit. And then when you're ready to move, you can use that equity to purchase the other property. Now, when you sell your property, that's going to be paid off. So that's a good thing. But typically those type of rates are interest only. So that's the reason why people like those. And you don't get charged unless you pull the money out, and you're not going to get charged on the money any more than what you already pull out. So let's say you got a line amount for 50,000, you only pulled out 25,000, then you're going to get charged for that. So it's a great option. I think that's probably one of the number one spots or one of the number one ways to do it. Right. Now, if you've already listed your property, then the next step is a bridge loan. Bridge loan, just think about it from a lending perspective. They're not going to make money on a bridge loan. So they're going to charge you probably points. Points are a percentage of the loan amount. So if you take out $50,000, they're going to charge you probably about 2 points on that. So that's an extra $1,000 plus closing costs. So that just means that the lender's going to be paid off in a short period of time. Lenders don't like to be paid off. They like to make money on the interest. So right. That's the reason why a bridge loan is an option, but that's when you're already listed and you need to use that as kind of like your last resort. One of the other options that Caliber does, since we're a nationwide lender and we're a huge lender, we offer a recast option. So I've done this too with actually somebody in Bobby's office, where she was selling her house, didn't have the proceeds, but she had some liquid cash that she wanted to put down, that she could probably put down a 5% down loan and buy the next place. But she qualified off of both mortgages. She put 5% down. And then once she sold her house, she used the proceeds to pay down her mortgage. She didn't lose the interest rate. So we didn't have to refinance her. Refinance is actually going with the current rate. Recast is actually, basically the option is you're re-amortizing the mortgage based on that new loan amount. So those are three options for you.
So bottom line, tons of options. Bill's team will parse through the different options and of course recommend the best option.
Yeah.
So let me talk about this process really quick, and I'll come back to you, Eron. So as we have the contract accepted, we're right here. And then these are through a contingency period, as Eron spoke about earlier. There would be, I would suggest in every single purchase, we still would like to do the inspection, but in most instances in today's market, I will coach the buyer to initial the as-is provision of our purchase agreement in Illinois. It doesn't mean that none of the health and safety issues will be mitigated. All of the health and safety issues only are request that we will suggest for Eron to go back to his counterpart for those health and safety issues related call outs on the inspection report. As an example, in our county, especially DuPage, our radon levels are really high. So we will still do, I would always suggest to do a radon inspection or measurement. And then that is a health and safety issue, especially for younger kids or young kids. If that meter reading is pretty high, we can go back to Eron and of course have a conversation with Eron. Eron, we need to have the seller mitigate this high radon levels. So um, I always, regardless of the market, I will always counsel the buyer to conduct inspections. Those issues, like I mentioned, radon mitigation, those Eron plays a key part in those conversations with his counterpart to make sure those issues are mitigated. And then Eron is also working closely with the title company to do the title search and get title insurance to make sure we have clear title to the property. And then that title company is also responsible for removing any of the cloud in the title, or what we call a legal term, encumbrance. And then of course, we always want to get title insurance because we don't want anyone coming out of the woodwork 5 years from today claiming ownership to the property. So Eron, if you could spend maybe 5 minutes on this entire process right here. I know you already spoke some to it, but whatever you didn't cover, feel free to.
Yeah, I'll just start
add.
with the, I guess, after we get the contract and go from there, if that's okay.
Yeah, go ahead.
Yeah, so usually I'm not going to even know who the client is or anything about it until I get the contract. A lot of times I'll, on the sell side, I'll have a seller potentially call me as they're considering, I'd say maybe 20% of the time, have a seller call me and say, I'm going to accept an offer. Do you need to see the contract? And they can send it to me before they sign it. But the nice thing about the contract that we use is it's a boilerplate form in most cases, unless it's new construction. Well, that's different. So I'll just focus on the 7.0 contract that we use. There's a 5-day or 5 business day period after the date of acceptance that the seller has signed it, where there can be modifications made to the contract. Your attorney can review the contract and suggest changes to you, things that the attorney would suggest are modified, and go through the contract with their client. So as the buyer, if you haven't waived your home inspection, you'll be able to hire a home inspector. Usually your agent will have a list of professionals they recommend, and you're free to use anybody you like that's like a licensed home inspector in the state of Illinois. But it's a good idea to probably use somebody that your team has a relationship with. And then you can bring that person into the house. You can set up your radon test, and then we'll get the report back, go through that with you, make suggestions. And if it's an as-is home, you shouldn't be requesting anything. And then we'll send that letter off to the other attorney and we'll eventually get a response back. I tell people in this market, it's customary to please allow 3 to 4 business days for a response. We'll probably get it sooner, but you want to allow a few days for the other attorney to contact their client, get a response back, and then we'll go through those responses. And so what is attorney review? Attorney review is that process where I sit down with you over the phone or a Zoom, whatever you prefer, and we go page by page through the contract. We make sure you understand what you signed, that any property on page 1 of the contract, like a dishwasher or stove or microwave, whatever is supposed to come with the home was included. And then we make sure we have your lender's information so we can get them work from the title company, and that there's no unanswered questions. And once that's all done and the letter's been sent, we'll get that response. We'll go through that response. If it's acceptable to you, then I'll countersign the letter and we have a contract. And so to have a contract, just in a nutshell, you need to have that offer that you made. You need to have acceptance, which is the seller's agreeing to it, which is the acceptance really comes after both sides have agreed to the attorney letters that have been exchanged. There's initial acceptance when the seller has countersigned the contract, and then you need consideration. The consideration is your earnest money deposit. Prior to the two attorney letters being exchanged, you'll have to provide a deposit if you're the buyer. Sometimes there's two deposits, an initial earnest money deposit, and then a second deposit sometimes within a certain number of days. It could be 1 or 2 days after attorney review is concluded. So once that initial process is done, the seller's attorney, for paragraph 18 of our contract, is supposed to order title insurance. Usually it's going to be from one of the what I call big five. So Chicago Title, Fidelity, National Title, Old Republic, Stewart's, First American. Doesn't mean that's who we'll be getting title from, but a lot of the times those are the title companies you see in the transaction, and they'll send it to the buyer's attorney. And then if I'm the buyer's attorney, I'm going to check, make sure there's no liens, judgments, lawsuits, back taxes, encumbrance from another parcel next to the property that could take away your interest. So in a nutshell, that's what we're doing. And then I'll get your lender that title policy, that commitment, so that they have what they need to issue you your loan. And in between, if there's issues that come up, you're going to be able to call your attorney, and they can send a letter, email, or make a phone call to the other attorney just to make sure things are moving along. Sometimes you'll go to the walkthrough and there might be an issue. Something was damaged. Something wasn't removed that was supposed to be removed. Your attorney is going to be able to help you. Unlike other states, Bobby and Joan probably know the answer. Bill might know the answer, but Illinois is one of those states where attorneys can only provide legal advice. They can only answer certain questions. So as a buyer or even a seller, you're not required to use an attorney. However, if you don't hire an attorney, you would be required to perform, and complete the transaction on your side of the transaction as an attorney. You're going to be required to get certain documents completed. You're going to be required to get that title commitment. You're going to be required to order a survey and do certain things. And if you're the buyer and when you're closing and you don't understand a document, the title company can't answer any questions you have. They can't explain your mortgage documents. They can't go out and get an answer for you. Or if you're stuck and you don't know what to do, your agent's not going to be able to help you. Your lender's not going to be able to help you. Only your attorney can help you. So that is why you're encouraged to have an attorney. And the nice thing about our office, if you choose us, is we give first responder and military discounts, and we give discounts to nurses as well. My brother's a nurse, so I give discounts to nurses. And so that's one of the things we do. And we don't charge if the transaction doesn't close. There's no attorney fee. So there's really no risk to hire an attorney in that respect. You pay us at closing. So if you have more questions, feel free to reach out. Our contact information, again, will be provided at the end of this.
Absolutely. Thank you, Eron.
Yep.
I was just looking at this graphic, and really, this graphic really is a great representation of our interfaces and where our lanes are. So if I really just a quick review, so pre-approval, of course, is with Bill's team. This section right here is my lane with Joan. And then around here is really all of the legal aspect, which Eron covered. And then around here, Bill and his team, all the way to obtain funds for closing. This portion right here is really an agglomeration of everybody's input. All of us three have a play in this, including the title company. But Bill, can you spend about maybe 4 minutes or 5 minutes within this space right here? This is all of your lane right here. And can you focus as well on the appraisal part? Because a key challenge nowadays, there's always a risk. Well, there is a risk, but we will work on mitigating that risk to make sure that we're actually offering on a property that will appraise. But Bill, talk to us about this bucket right here, and please cover appraisal gap risk more so than others.
Yeah. So let's, I think the appraisal gaps are like the biggest thing right now. And I think in this market, it goes back to the offer, right? You're trying to beat out other people. So you're trying everything possible. And I just feel like that there's people that are falling in love with the house. I feel bad for a lot of the buyers out there right now, but people are falling in love with the houses. So they're putting out waiving inspections, like Eron mentioned. Doesn't mean it doesn't mean waive, like you're not going to get an inspection. You still get an inspection, but you just waive, like you can't go back and ask for like $2,500 closing cost credit for something that needs to be repaired. So there's just things that you're putting out there to really try to win that offer. And that's like right here where it says remove contingencies. You're putting yourself in the best light to the seller. One of those happens to be the appraisal. So this has been the biggest thing, I think, probably in the last 60 days, just because the demand now has been so much more than it was last year. So we're seeing anywhere from appraisal gaps, which Bobby was mentioning, is $10,000, $25,000, $30,000 appraisal gaps. What does that mean? It means that you're willing to pay more for that property. So let's say you buy a $100,000 property and said, I'm going to do $20,000 appraisal gap. So if that property, you buy it for 100,000, that property appraises at 80,000, you have to bridge that and pay for that extra 20. And then, your financing is going to start off at 80,000. So if the property appraises out at 80,000, lenders are always going to finance off the lower of the two, whether it be the appraisal value or the contract price. Before we, back a while back, we were getting appraisals that came in higher, and lender or buyers were coming in saying, hey, can I use that equity? No, they're always, remember, go back to the simple rule of lending. Lending is going to finance off of the lower of the two, whether it be the contract price or the appraised value. So what's happening now is that when people are actually putting in these appraisal gap situations, we have to, and going back to the team aspect, Bobby, myself, and Eron have to kind of put our heads together and say, look, do they have enough money to actually do the appraisal gap? If they don't, then it doesn't make sense to put an appraisal gap in there. And I feel like that a lot of people out there are getting set up for failure just because there's not enough communication on that front. So we're actually saying, okay, well, let's do that. If there is an appraisal gap situation, the way to think of it is, let's say you have 20% down, you're a solid buyer, you're putting 20% down, and you don't have any more than that 20% down. Here's the way to look at it. Okay, well, I still qualify for a 10% down option. So let's say that, you put 20% down and it appraises out at 10% less than what the contract price is, and you had the appraisal gap in there for that. Then what we just do is just structure the loan with having mortgage insurance and do a 10% down option. That's how I would pretty much structure that. So, and it also goes back to that conversation at the beginning. How long are you going to stay in the property? Is it worth it to do the appraisal gap? If it is, great. Like I had a situation down in Savannah, Georgia. Guy, the appraisal was coming in different numbers all over the place. And I just asked him, I said, you're retiring down here. We bought Henry Ford's old estate. He loved it. Emotional buy. He was going to be in there until he gives it off to his kids. And I said, it doesn't matter. Like when you have the money to buy this, no matter what, do you love this place enough to really overpay right now? He goes, yeah. Okay. Then you've already made your answer. And that's the thing to kind of have the conversation with. I think a lot of people aren't doing right now. So all that being said, that's kind of like one of the biggest items right now. I think another thing that we're seeing too are rent backs. So just keep in mind when you have a seller that it's kind of trying to get their house sold and they don't have a place, like we mentioned before, we're seeing a lot of rent backs. The max amount of days that you can rent back as a seller is 60 days. So that has to come into play too. So you can actually buy a house and rent it back to the seller for 60 days. And then that's another option too. And Eron can probably talk about that a little more too.
Yeah, with post possessions, the one thing I would say is I understand, that is a way that you might have to, go about to get a transaction accepted or closed. Just keep in mind, Illinois is not a landlord friendly state. And why I say not a landlord friendly state is the buyer, once the transaction closes and disperses at the title company, how I write my post-possession agreements is they're a license, not a lease. And the legal distinction between the two is if I give somebody a license, that means you have the right to use it and I can immediately take it back. And I don't have to go through what's called forcible entry and detainer action, which is an eviction process for a apartment or a lease that I'm giving you. Judges don't see it that way. And lawyers are always trained to think of worst case scenarios. So if somebody goes into that post possession and now the seller doesn't leave because something didn't work out with what they're buying, and you have to evict them and go to court, you may not be able to move into your home. So always think about that if that were to happen. And if that's, you still want to move forward with that, then great. But just understand that there is always that chance you may have to go that route. Fortunately, I've only had one situation where a seller stayed over a few days and it worked out after we sent them a nasty letter. In the 8 years I've been doing this, I've never seen anybody have to sue anybody to get them out of the house. Because what I do is I also say that the title company is going to hold, if we're going to do a post possession, the escrow or security deposit. And usually the seller wants that 1 or 2% that's agreed to back. And we want the buyer to be paid the rent up front. So usually there's a way to write an agreement, have it worked out. You want to make sure you're handling, have a competent attorney handle the post possession. If you hire somebody who doesn't do this on a regular basis, they might not draft a good agreement. And then as the buyer, you can get stuck not having enough security if your home is damaged. So again, I've not seen anybody actually get sued. I know of those cases, but luckily none of my clients ever had to go through that process.
That's great to know. I mean, because we're seeing more of that, and I'm glad you brought that up. By the way, all of us are investors too, so that could be a whole different webinar series.
Yeah, that's true. And I write my leases in such a way that I've never actually had to evict anybody either.
I did. I learned it a whole day in the courthouse.
Yeah, Bobby, hopefully you never have to evict anybody.
Believe it or not, you think when, as a landlord, I'm not trying to go off on a tangent, but you think that when the contract on a lease is over, that they should vacate the premises, but sometimes the tenants know more than the landlords, and I had to go through an eviction process after that, so I had a squatter.
Yeah, that's true.
I want to end. Thank you for that, Bill. Sorry to cut you off, but hope I'm not cutting you off. I want to end at the top of the hour. Let me spend about 2 minutes on the last square that I squared here on the graphic, and then Bill, I'll turn it over to you for final words, and also people's mind where they're trying to time the market. So last graphic here, obtain funds for closing. Bill's team works in tandem with the title company. Eron is also down there deep in the weeds, working with the title company to make sure that we have all of the documentation needed as we get to closing period or closing time. So when you have what we call clear to close, that's the green light really in being able to close on the property and have really possession of the property. So, and then of course, on closing date, everything's good to go. All of the signatures are procured by the title company, and all of the documentation are procured as well, with signatures from the buyer and the seller and all stakeholders. Bill's team is able to get all of the documentation, then officially title and ownership transfers to the buyer. I want to, Bill, ask you, I'll spend about a minute about timing the market, and then Ian will address your questions if you have any. Bill, foremost, especially in today's interest rates, foremost in people's minds are, well, I want to time the market. Well, maybe I want to wait. So Bill, talk to us about that.
Yeah, that's, I actually have a screen if I can share it really quick.
Yeah, go ahead.
Yeah, so let's go here. See here. Yeah, I mean, and I was just thinking about this. Timing is everything in this marketplace. I mean, the biggest question that people have are, when should I get an approval? I say right now. Here's a couple of graphs here. If you can see this, can you see the Scotsman's Guide?
Yep.
Okay, so this kind of is a little bit of a forecast. I pulled this up the other day. This kind of shows you what's going on this year, where we were in 2019 home purchase originations. We're on a steady incline. So if you're looking to purchase, I mean, you're at a perfect opportunity, because I think 2023 is going to be even more. Like we mentioned before, it's the demand, and then you have to look at birth rate. So millennials are purchasing, And you also see a bunch of renters that are purchasing right now too. That's been a new thing because of the fact that rent prices have skyrocketed. If we're looking at interest rates, we're looking actually pretty good when we're looking at the last 4 years here. So it's not bad. I mean, I think people kind of, the shock is what we just came out of. We had really, really low interest rates because of the pandemic. It was forced false sense of security because the feds were driving rates down. Now we're seeing them kind of level off, and this is hopefully going to help the demand situation. We're here having so much demand here. When you're looking at cost of waiting, I always show this to people. You have to think about where we're at and where we're going to be. So rates are on the rise. And so also the other thing that's happening too is you have the values of property. With the demand, you're going to see the value of property. This is the beauty of home ownership. The two things, like I said, are going to be appreciation and amortization. So as you purchase right now, that 350 could go up to 362. But if we're at a 4.75, 5%, 5.125, and let's say you wait 3 years and you're going up to 5.875. Here's the numbers. The numbers can be staggering when you look at waiting 6 months all the way out to 3 years. And not to mention, this isn't even taking into consideration the rent prices that are skyrocketing. This is just loss of appreciation amortization. So that's what we consider equity. So that's just something to think about. I could speak till I'm blue in the face with regards to home ownership and why it's good, but the numbers typically speak louder than words.
Yep, absolutely. Thank you so much for that, Bill. So Ian, is there anything we can answer for you? Would love to answer any questions. Can a high debt of student loan hinder one from buying a home? Bill, do you want to take that?
Yeah, student loans. So I've gotten a lot of people done on student loans. So it's weird. There's two big investors when you think about conforming loan limits. Conforming loan limits are anything south of 647 on a purchase price, or on a loan amount. So the two big investors are Freddie Mac and Fannie Mae. If you don't owe anything, which a lot of people, when we pull credit reports, you'll see a student loan debt doesn't show a monthly debt. But there's a couple different ways. One, Fannie Mae will actually take 1% of that. So if you, let's say you owe $100,000 worth of student loan debt, they're going to take, if you don't owe, like you're not showing a monthly payment, they're going to take $1,000. Freddie Mac will actually allow you to take half of that. So we could actually qualify you for Freddie Mac better than we could qualify you for Fannie Mae. So it'd be $500 versus the $1,000. Now there's some people that are on income-based repayment plans. Here's the issue with student loans. They will not give you, sometimes it's harder than ever to get something in writing from them showing what your monthly payment is, but you could actually get something in writing saying that your monthly payment's like $100, $200, and we can qualify you off that. If you can press them and get that and show that that's going to be the payment that you're going to be making, then the lender can actually use that to qualify you.
Ian, did that help? Okay.
No problem.
Like I mentioned, I want to end at the top of the hour. Lisa, if you have any more questions, I can give you my contact information. I'd be happy to answer any of your questions. I will also touch base with you. I'd like to get your contact information as we get people from Illinois, maybe with a job transfer due to family or even reverse, coming out to Chicagoland area. I'd be happy to be your referral partner. We'll exchange information after the webinar today. So anything else from you, Eron? Thank you, Eron. His contact information is on the chat. And also,
No, if anyone needs anything, let me know. I'm putting my chat or contact information in, Bobby.
Bill, do you want to put your contact information as well?
Will do.
Okay.
Go to that.
Okay, well, thank you so much, everyone. This ends the webinar session for today. And again, Ian, my contact information is right there on my background. Also, I think all of our contact information is still on Eventbrite. They're all in there. Please feel free to give us a call. We'd be happy to sit down in person or even a Zoom session if that's what you prefer, even one-on-one with us, or even looping in Bill as well, and then Eron further down the road. So For those watching later on, my name is your host, Bobby Taruc. This will be on YouTube. Click on the subscribe button to subscribe to our YouTube channel. And Bill, let me know if you want the MP4 file as well. So
That'd be
again,
great.
my name is Bobby Taruc. Thank you to Eron, attorney Eron McCormick, Bill Pendley, the Bill Pendley team at Caliber Home Loans. Thank you so much and have a great day. Thank
Have a
you.
great
Good
day.
weekend, everyone.
Thank you.